Hello and welcome to KYC. I am Sharad Dubey and the company on KYC's radar today is Rubicon Research. It's a newly listed company. It's a pharma player. But the key question is, why have we got this company today in our show in the KYC? And what are the key elements which we'd like to know about this company? The first one, of course, is what is this opportunity coming in the nasal spray market? Is it a very large market? Is there any kind of a niche mode does the company have? That's something we'll be looking at. What's the contribution coming ahead in the specialty segment? Now, of course, high margin also kicks in when we speak about this. The third question is, overall, more product launches to be going ahead. Why? Because companies focusing a lot in the R&D space, and that's something which we will be looking at. Now, strategy against the US trade policy. We have seen a lot of, you could say, kind of movements happening in this pharma space where the concerns are still there, and also the headwinds that's coming from the US generics industry, and that's why the pricing pressure is there in this segment. It's a new segment which the company is operating in, but I would like to give you some more details when it comes to about the company. These are the questions which we would like to know about it. This was recently listed company on October 16, 2025. It's an R&D-led pharma manufacturing company, and you could say the peer is Shilpa Medicare. The current product portfolio actually has four important fours: oral solids, oral liquids, nasal sprays, which we spoke about, and topicals, which are basically ointments. Interestingly, the scaled up portfolio they have launched on a faster basis, and roughly 70 of them have already been commercialized by this June 2025. R&D spending, that's very interesting data, 11% of the total revenue, and that's the higher coming as compared to the sectoral spends. That's roughly around 6% odd. And also there are two US FDA facilities coming in. One is in India, another is in Canada, and three other US FDA manufacturing facilities are there in India, which includes places of Ambernath, Satara, and Pithampur facilities. So, of course, 5 total facilities are there if you include both R&D and the manufacturing setup. So, this is what we have got to know about the company. What are the important questions which we'll be asking in today's management? We have discussed that. But let me take you through the format of our show in KYC segment. And if you look at it, we have 8 parameters where we judge a company in our show. One by one, we'll give ratings to it. This, of course, includes the main numbers: income statement, balance sheet, and cash flow. In return ratio would be our 4th operating parameter. Apart from that, shareholding street cred, which is nothing but the stock returns coming in. Of course, this is a newly listed company, so the data will be less. Valuations, where does it stand? And the outlook going ahead, where does the company give its strategic view? So these are the 8 parameters where we will be judging the company and giving the numbers. So let's start with the first parameter, that is the income statement. Largely looking at these numbers, we have taken it from the IPO's RHP itself because the company doesn't have a history. It was just recently listed on October 16th. Look at the revenue and EBITDA numbers. There's a significant jump coming in. Operationally, even the margins, that was just 5% in FY23 and now higher teens in FY24, and then a jump coming for 20% in FY25. Even the H1 numbers have been on the strong side. Q2 numbers, let's have a look at it. A very superlative performance coming in. Revenue jumping almost 17% on a sequential basis. EBITDA also jumping 25% odd. Margins also comfortably above the 22% mark, and that is actually industry leading, you could say that. Of course, the company has a very short history, but overall, if you look at the performances, the margin trajectory, now we have taken these numbers over the last 4 to 5 odd years. It is maintaining that up move coming in. Look at that, in FY22 it was negative, but after that FY23 there was a turnaround year. FY24-25 till this Q2 numbers are comfortably in the higher category coming in with the returns between 18 to 22%, and it is sustaining. So net, the income statement, be it the revenue, be it the EBITDA, be it the operational margins, have been showing a strong footing, and the Q2 numbers, the recent numbers to judge the company post its IPO, still stand strong. So overall, for the income statement, we will be giving a +1 going ahead. Also, let's move on to the balance sheet. That's a very important aspect to look at. And here, overall, we look at the book value numbers. That has gone up, of course, post-IPO proceedings. These numbers have gone up. Borrowing, that is almost 568 crore rupees. But if you do the debt equity ratio, it is still in a comfortable level. There's nothing to panic when you look at the balance sheet, especially when you compare the borrowings with the equities. Cash and bank, that has significantly gone up, and IPO application of proceeds will be taking place. So because of that, you're seeing a higher cash balances as well. So net, the debt equity ratio is comfortable. Cash bank balances are on the higher side, 116 odd crore rupees. Last year in H1FY26, which you should be looking at, that's more than 150 odd crore rupees. So it would be a neutral rating coming from my side. The third important parameter is the cash flow parameter for the company. And overall, if you're looking at these numbers, they are pretty decent. The PAT numbers have gone up. The FY25 numbers, 134 odd crore rupees. Even H1 numbers are good. And overall, the conversion to PAT, the cash flow operations to PAT, that ratio is also strong. Net cash flows, there was a lot of variation in the last 2 to 3 odd years, but in FY25 and H1 to FY26, the numbers are on the positive side. So net, I'll be giving a neutral rating when it comes to the cash flows. Return ratio, that's very much important. FY22, for all the numbers which we had calculated in our analysis, it was on the negative side. But look at the growth coming in 23, 24, 25, and it is sustaining. ROC above 26%, ROE above 29%. Generally, for these industries, an ROE or ROC above the 17 to 20% mark is showing strength. And that's what I had mentioned earlier, that it's industry leading in a lot of ratios, and that's what coming into these return ratios as well. Look at that, FY25, it's 26% plus, and ROE also is 29 odd percent. So significant returns coming in for the stakeholders. So net, this would be coming in as a thumbs up from my side, and I will be giving a +1 rating to this. Also, let's move on to the shareholding segment. We always spoke about the numbers, but shareholding doesn't has much of history. And if the company doesn't have a history, we'll take a neutral stance. Promoters are having roughly 60 odd percent. That's decent. FISDI is holding roughly combined basis 20% stake in the companies, and public holding 20 odd percent. So net, it is a neutral rating coming from my side when it comes to the shareholding parameter. Now, of course, we spoke about the very short length coming from the IPO to judge the company, and the street cred 1 month return has been 18%. Recent listing, it's just been 7 odd percent, and the issue price, because of a pop-up listing, we are seeing that return to those investors has been 38 odd percent. Stock has not had much of a history. So net, I will be giving a kind of a neutral rating for street cred. Also, moving on to the valuations, that is also a very key parameter which we judge the company on. And net, the valuations look decent, and the history over this timing is on the lower side. But the EPS numbers, the P numbers, the FY26, let's point it out, that's 49 times. That's on the higher side. But for FY27, if you get these numbers, it's coming in tandem with the industry averages. Generally, the larger players in the pharma, they do have that 35 to 45 P ratios, and some mid caps also come in this range. So net, valuations, just because on a shorter timeline, I would be giving this a neutral rating. Most importantly is the outlook segment. This is our last but not the least. It's a very important parameter, outlook going ahead. This is largely an undiscovered company where the talks in the investor circles and the broking circles are pretty less. That's why we have picked up this company as well. Interestingly, looking at the new launches in the generic space, especially the nasal spray category, which we had earlier mentioned also, that why we actually want to call this company in KYC, because of the total addressable market. That is something which augurs well for the company. Also, they'll be focusing much more on the enhanced prescription-led business in the CNS therapy. This is a bit technical, but to put it in perspective, the prescription-led businesses do have high margins. So companies slowly moving out from the generic category which they were there. They did grow in 2010 to 2015. That was a cycle. But now they are moving into the specialty space. That means higher margins coming in. Also, a stable R&D productivity. And whenever a pharma company invests a lot in R&D, their product pipeline, that increases. And why this is important? Because 11% of the revenue from R&D just comes out of sales in this space. And the industry average is 6%. That means if you put more money in R&D, your product portfolio goes up. And in regulated markets, you get a moat. Also, lastly, the curated approach coming in the supply chain management. This seems basic, but this adds up later on, especially when it comes to the operational leverage of the company. And that helps the margins going ahead front. So there are two engines for this company. First is, of course, your specialty segment, that's where the revenues is going up, and also company is doing operational efficiencies, backward integration, so that's also helping the company increase their EBITDA numbers. So net outlook, it seems very strong, so I have given a plus for this. Now let's give you all the entire details for the ratings which we have given in, and one by one we will explain you why the parameters were there and what numbers we have given. Income statement, very strong. Q2 numbers also coming in strong, so I've given a +1 to it. Balance sheet, the debt level has gone up, but so has the cash bank level, and the debt equity ratio is still stable. A neutral rating coming in. Cash flow also not much happening because it's a very limited time frame we are judging the company on, so I've given a neutral to it. But return ratios, they have done really well. FY22 was a watershed year, and then the conversion started coming and going up, up and up. Shareholding, largely nothing to talk about, and same thing goes for street trade because of a lesser time frame. So stock was listed on October 16 and it's just been almost a month since its listing, but net it's neutral. Valuation wise for FY27, the numbers are neutral, in line with what the industry is there and their peers in the small cap space. But the thing which I like the most is the outlook going ahead. How does the company have its moat? How does it actually benefit despite headwinds coming from the US markets? How company is defending its moat? So I've given a +1 to it. So the total addition comes to 5.5 out of it. And generally, historically speaking, that's on the higher band when we give these numbers in our KYC segment. But of course, you must be wondering, what are the questions we need to ask the management? How important it is, that what lies ahead for this company? And even broking house Motilal Oswal is very bullish on this company. They had recently come out with the initiating report as well. And we will be talking with the management. And of course, the first thing from the management joining us is Parag Sancheti. He's the CEO at Rubicon Research. A very good afternoon to you, Parag. First question, of course, is the US markets. They have shown headwinds coming in, tariff uncertainties coming in, but despite that, as what the company has stated, brokerages are very bullish and you are maintaining your moat. So the first question the investors, the community wants to know is, what's your actual moat?
So thanks for having me on the show. From the actual moat which we have is across three pillars, I would say, and which is based on our very strong foundation of science, regulatory, and innovation. And those three moats are our portfolio selection, our execution rigor, and the capital allocation. So these are the three moats which we have consistently followed over the last 10 to 12 years.
Parag, let's go into detail, segment-wise. First of all is the nasal spray segment, and that has been doing wonders for your company. But I want to understand what's the total addressable market you're looking like, and give us a flavor of the market share which the company is having, because we don't have those numbers yet. But if you could just give us some flavor of that, because nasal spray is a big opportunity for your company. So what is it? Quantify that, Parag.
Yeah. So nasal spray is again a carefully thought through strategy which we initiated way back in 2020. And again, this is a broader umbrella of drug device combinations which we are looking at. Any things which get delivered through the drugs getting delivered through device. And we picked up nasal spray because I think it's a space which is very complicated and scientifically very challenging to develop. In addition, I think in our branded business, we are looking to nose to brain delivery. Now going to, I think, the addressable market size, I think there are quite a few approved products in the market, in the US market, and there continues to grow a lot of other products which are getting approved, including the Neffy, which is a epinephrine nasal spray, which kind of replaces the EpiPen, which is a pretty successful product, though has had some medical limitations. So I think the market space is expanding. Don't want to put a number to it because it's a very growing space, and multiple products getting approved from the innovators creates a sizable size for companies like us. And also we in turn will also be creating market through innovative products.
That's a pretty interesting take coming in, Parag. They have actually picked up this nasal spray base, and that's actually doing well. There are two reasons coming from the management. First is, of course, it's a niche player. And also, they're getting a lot of approvals from the regulated markets. When I speak about regulated markets, I just want to inform my audience that this is the US markets where US FDA is very active. That's why we call it regulated markets. But coming back, apart from this regulations where there's a lot of strength coming in, the specialty segment revenue contribution that has gone up, something which was a commodity related business from generics. After that, the company has moved out to the specialty segment. Now, what's the current contribution in the revenue segment, and what's the target going ahead for this specialty segment?
Specialty products this quarter contributed 33% of our total gross profit. And that number has been increasing and continues to increase over a period of time because of our differentiated product portfolio. So this business segment will continue to grow as the company gets more approvals with limited combination. And as we define specialties, one or less than one competition is what we define as specialty, just for the audience. And we continue to have strong approvals in that category.
All right, the margins, let's just have that look as well. It's of course constantly going between 21 to 23 odd percent, and it's decently set. And there has been, of course, a very big turnaround from FY22. But Parag, now the question remains is, there are two engines we spoke about, the specialty segment revenue going up. Then, of course, we discussed about the operational efficiency also kicking in. Now, what would be the margin outlook? Are we looking at touching that 25% mark on a blended consolidated basis in the coming quarters?
Yeah, so, the current quarter was close to 23%, and we are guiding to that, which was a growth from 21% previously. So we're guiding to that, and we are also guiding for a sustained revenue traction. So as of now, I think we feel that we'll be able to sustain the increase in EBITDA we have depicted in this quarter.
That means, to put it in a simple manner, 23% EBITDA margins we can expect at least in the coming quarters?
Yes.
Okay. So 23% expectations would be there, investors. That's an important point coming in from the company. But apart from that, of course, there's an important question lying is the R&D space. Your company is doing it much larger, almost double of the industry average. So much R&D expenses are happening, and generally when this happens, there is a time frame also when these products start coming in. Just give us the rationale why the R&D expenses are so high, and if the benefits are coming in, what would be the timeline for this?
So if you look at the history of the company, and obviously we are a newcomer in this space, we've been obviously disproportionately spending on the R&D to kind of gain that R&D momentum on approvals and product approvals. We have guided in the long run around 10 to 11% of the revenue would be spending on R&D. The benefits, if you see the spend which we've been doing, which is quite significant as compared to our larger listed peers, we've been already seeing that in our margin profiles, our growth. If you look at the performance of this quarter itself, all these approvals are playing out. And as we go ahead with the significant spend we are doing on R&D, we definitely look at this playing out across the specialty and the generic segment.
Well, Parag, if these approvals are coming in fast, and if I'm not mistaken, almost 70 odd commercializations has already happened, and your scaling up portfolio is something which the street is very gung-ho about. So this number 70 commercialization in June 25. Now, what are these numbers we can expect? If you could just give us a broad figure in the, the end of FY26.
Yeah, so I'll just give you a broad number which was there in the DRHP. I think we have roughly, 71 approvals. We are, 81 approvals, 71 we have already, 71, 72 we have commercialized. Commercialization number is one of the best in class, 93%. As put it in our RHP, we had 80 products which are filed with the FDA at different stages of R&D. 17 are filed with the FDA. So if you look at it, it's almost that we are doubling up our portfolio in the next 2 to 3 years, along with very near-term 17 approvals which are already filed with the FDA.
When you speak about doubling of portfolio, this is at a consolidated level, or is there a sector-wise kind of a view?
No, it's at a consolidated portfolio level.
All right. So consolidated portfolio level, you will be doubling this portfolio in the next 2 to 3 odd years. and that's pretty much interesting. So nasal spray is something which the management has been bullish on. Their approvals and also a 23% margins, that's something which you will be holding it up for. But apart from this R&D spending, let's go on to your other segments also. But before that, the US trade policy, that is something which has been a cause of concern for the pharma players. What would be your strategy or your hedge? Because that has surprised the broking houses as well, the way you have actually fought back when it comes to the US trade uncertainties, and what actually lies, what is your strategy?
Yeah, so if you've seen the US policy also from the discussions to now, it's kind of evolved. And if you look at generics, primarily have been put out in different trade deals which have been done. And in fact, President Trump categorically saying that, or in the recent press release saying that generics are out of this discussion. Even when they discussed about brands, I think there was one tweet and nothing followed beyond that. So we feel that. It's the policy currently is stable, and I think with that initial noise, I think things have panned out with the various trade deals which have been done. Going ahead, the kind of portfolio we have. So now coming to Rubicon specific, the kind of product portfolio we have, where we have a pretty significant percentage of specialty products which have no or very, very limited competition. I think we have a decent pricing power there. So if in case there are tariffs, we could pass it on to the customer. If you look at the other part of the portfolio also, so 33% of the gross profit, as you know, comes from specialty. But even for the rest of the portfolio, if we assume our competition is from Indian companies who are from the same geographical cost point, we today also have a good market share in these products, which depicts that we remain very, very competitive. So in case if there is tariffs, I don't think we'll be at a disadvantage to any other play. And if there is ability to pass it on, we'll definitely pass it on. But even if at the status quo, we would be able to keep it, we'll be able to keep a market share without any or very negligible impact of the tariffs.
So there is a negligible impact of tariffs coming in for Rubicon Research. But Parag, apart from nasal spray, oral solids, oral liquids and topicals, these are the three segments you are operating in. We just wanted to get the sense of what are the demand trends and the client confidence looking like?
So we don't, from a generics perspective, I think we don't look at only, we are very product specific. So we don't go, a topical or, what a injectable or what a oral solid looks like. We look at the product, we look at the competition scenario there, we look at what is the underlying patient trend there. And accordingly, we invest in our research to ensure that our wasteful R&D is less than 5%. So if you look at, I think we've been very, very product specific. In our specialty part, we obviously focus on neurology in a big way. So in neurology, we are looking to solve for unmet patient needs, where I think there are lots of gaps in the current, medications, which we are trying to solve through innovations which allow patients to get the full benefit of the therapies they are taking. So that's, I think, how we look at it. We don't go primarily by just the dosage form.
I'm looking at your numbers. Your compliance record has been very strong. There was 10 US FDA inspections and at your manufacturing site, and there has been never an OAI classification. So right now, currently, of course, you cannot share the entire details, but in this quarter or something, has there been any inspections or something?
No, currently there have been no outstanding EIRs pending for us. So currently there have been no inspections.
All right. So that's the management coming in for this company, Rubicon Research. Thank you very much, Parag, for taking out your time and giving the views and the outlook ahead for Rubicon Research. But let's give a revision for what are the key takeaways from this conversation we had with the management of Rubicon Research. First and foremost is nasal spray base is getting faster approvals from the US FDA. Mind you, this is a high margin niche business and the company is having a significant revenue coming from this segment. Also, the second important thing the management has stated is doubling of portfolio every 2 years. The commercialization numbers are on the high side, 70 in June 2025, and the recent RHP numbers had stated. And lastly, they will be able to sustain 23% margins going ahead. they had a turnaround quarter in FY22, and after that they have been significantly going up, and Q2 numbers also suggest that numbers at 23% will be stable, and that's what the management has stated again. But let's give you the ratings, what we had actually given in income statement. It was a positive coming in because of a solid show in the numbers. Balance sheet cash flow, net neutral coming in, and return ratio, significant up move coming in. Small time frame, that's why shareholding, street credit valuation have been given neutral parameters. And lastly, the outlook, that has been on the strong side. So net, we have given a total of 5.5 out of it. And historically speaking, KYC rating, this is on the higher side when it comes to Rubicon Research. So we have given you an entire setup of what actually it means in the KYC segment for Rubicon Research and why broking houses like Motilal Oswal are bullish on this counter. Well, that's all for KYC today. Stay tuned to NDTV Profit.